weekly recap. I know I haven't been posting in YouTube lately. I am developing myself. I am growing into a new phase of my trading career, so I'm dedicating a lot of effort and time and hard work because I truly believe that the first phase, basically the second phase of my trading career is over. So now I am in a different race. We cannot stop building, we cannot stop developing, and there is always going to be a challenge out there for us. So here I am trying to doing the same thing that actually I asked to my students to do, to put the hard work in when they really want to achieve something. And I'm leading by example. So that's why I'm not posting too much. That's why I'm a little bit away from social medias and um, YouTube, because I am growing to be a better mentor, to be a better trader, to be a better investor. So, but then again, I have got a lot of messages of people like, "Oh, I need your guidance. I'm kind of lost. I need your post. I need, your YouTube, keep me updated and keep me sharp." So here I am trying to just provide what people need and people ask me to do. So let's going to give it today like a little master class. So I'm going to be releasing here mainly my main concept of trading and the foundation of my trading. So please just grab some kind of um, note or whatever you think is good, or just rewatch the video as much as you can so you can actually get get the idea of how I trade. Again, nothing that I'm going to be saying here is a financial advice. Nothing that I'm going to be providing here as knowledge is something that I have invented. Everything that I know, I have been learning from ICT mainly. Then I am TT Trades and I am were one of these people that enlightened me a lot. And I suggest every single person who is listening to this go to TT Trade server. You are going to have a lot of really great and simplified information there with no noise. It's a great server now. TT Trade have this amazing collaboration with 2 degrees, and they have made this fractal indicator, which is really, 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 really good. Basically, is the indicator itself is a signal provider. So if you understand it and use it in the correct way. So I have learned from these people. Shout out to Cian, the CEO or TCM Capitals and the TCM prop firm. I have been next to Cian for a really long time. He used to have a server called SN Capital. Allah bless you, brother, for the things that you're doing for traders. God, the peace of God be with you. I wish you a lot of help and a long life and a really happy life. You have done a lot of things for traders and you're still doing it. So you're doing the work of the great Muslim that you are, and I'm grateful that I met you one day. So with no further ado, let's gonna get into the topic of the trading today. So one of the things that we need to understand, first of all, is that high time frame speak louder than low time frame. So many traders are spending too much time in low time frame. They don't allow high time frame to set the bias and the strength of the market, and they are caught up in the retracements in the low time frame that actually seems to be a reversal when they are not. So you need to be aware of the previous high time frame range that market already have built for you. Every single hour, every single 4 hour time frame range, every single time frame, every single weekly current range is going to modulate, is going to be completely directly affected by um, the previous range. Once again, I'm because sorry because my accent. I am Cuban. English is not my primary language. If I misspell something or mispronounce something, my apologize. I really hope you understand, but the value inside my broken English, I'm sure is going to help you to understand the market in a better way and you have a better approach to the market. So you're always trading a high time frame range. Always, right? So let's going to look at this price action here, and all of these all of these green lines are opening prices, right? So we have the monthly open here. Every single person that I knew, they were saying that this is a power of three. This was the manipulation. This was the beginning of the distribution. That now we're going to come back in to keep going down. Every single person I know were saying this, and I was like, let's going to wait to see what the market is going to be to do after the rebalance, because we have Wednesday, this is Sunday, we have this range that is the previous weekly range, the last week of the previous month, right? January. So based on the fact that this range, or the current range that you are going to be trading, is going to be completely directly affected by the previous range, if you're bullish, right? What you are expecting is a retracement for continuation. Until this range is not violated to the downside, you are still bullish. And this is what make a lot of traders fail, thinking that because we are doing a retracement, we are now going to take this liquidity down here, because they really don't understand how the market is booked, right? So basically, what you always are trading is this. You're trading a high time frame candle where you're going to be using low time frame for execution only, right? I'd only spend minutes, maximum 1 hour or half an hour, to go in low time frame for my executions. Because if I know, because you need to use the knowledge that you have. I always have said this a lot of times. It is not what you know, it's how you use what you know. So if you have the knowledge, the high time frame is stronger, is going to say a stronger bias for the market, why you are going to spend more of your time in low time frame. It doesn't matter if you miss a few pips in order to get big pips, big amount of pips, right? Or you're going to be a participant of a high time frame expansion. It really doesn't matter. So you're always trading this. This is what you need to understand. You're always trading a high time frame candle. So depending on the color, that's why this is great. Depending on the color of the body of the candle and the opening price, you are going to determine if this candle is going to be bearish or is going to be bullish, right? If we are having an opening range here, and again, it does, when I'm talking about this, it really doesn't matter where the high time frame is going at this point at the opening price, because this high time frame candle can be used as a retracement candle, as a weekly retracement, as a 4 hour time frame retracement, as a daily retracement. So you need to be aware of what is the logic behind the current price action that market is trying to play in front of you. So if you're bullish and you have an opening price, you have a manipulation, you have the market closing below opening price, and the market retrace and break again, you are expecting a distribution to the downside to create a low. You are going to experiment in retracement and closing time frame, to price level. So you don't want to be part of the Judah swing. You want to be part of this, because we have 1, 2, 3, 4 bearish order flow have been established to the downside, right? So this is the most simple example that I can give you, but I can make it a little bit logical for you when it comes to the charts. what you are going to be looking at, if you are bullish, but this is going to be a daily for retracement, what you are going to be looking is at the opening price. You are going to see accumulation, expansion. You are going to see accumulation, expansion. You are going to see accumulation, expansion, and a smart money reversal, or the beginning of the smart money reversal, right? It's going to put it here so we can actually, right? So, and the close level, right? You have the close level here. This is a buy market making model, where is Friday, if this is a previous weekly candle and Friday already started the reversal, right? If this is going to be the smart money reversal, what you want to see is the Monday opening low, rebalancing this range, completing the reversal Thursday, failure to swing low, Monday's low, and then you want to see the smart money reversal Tuesday, and you want to see expansion to the upside, targeting the smart money, the original accumulation of the market making buy model. This is when you understand you're still bullish, you're not bearish, because the market and the central banks are investing by orders in this manipulation to the downside or rebalance of the previous range, right? Because we had a range here, this candle make a rebalance, making a market make a buy model, and then you understand, okay, I need to rethink where the market is really going based on what the market is building. And I'm going to go to the beginning again. We're always trading a high time frame candle that is going to build something for you, right? So this is when it comes to open, high, low, closed, which is the foundation of the market. Now, let's going to get into the weekly. If you already know open, high, low, close, open, low, high, close, that is going to define the expansion of that candle, and you see Monday opening price trading below and reversing, what do you expect for the rest of the week? You are expecting every single day to trade below midnight open, so the market sorry, so the market can keep pushing the expansion of that weekly candle. If you see the market opening, trading above, and then closing below the opening price, what do you expect? You expect a bearish daily schedule until Thursday or Friday reversal. Mainly Friday reversal is to rebalance this week and then continue lower or reverse to the upside, right? So I explain all this so you can actually understand this. We have this week, right? We have this high and we have this low. This, sorry, this is the foundation of your next week, because we are going to if we take this level, the equilibrium of the previous range, look at this. Look at this beautiful mitigation, retracement, close, no reversal. Look at this open price mitigation of the equilibrium, closing inside above the equilibrium of the previous range. Then you see an engulfing candle. Then you see this bearish structure, which is a fair value gap that's supposed to create a new low, being closed above with a displacement that is going to be used later to push the price higher, and then eventually we are closing above opening price of the week. So we have open, low, reversal. This reversal establish continuation. Therefore, what you are going to be doing on Thursday, you're expecting an open, low, high close. So Thursday, open here, we are bullish overall, make the manipulation, and here is the reversal. But then again, where this happened is actually the key. In this impulse to the upside, in this expansion that was really aggressive, when was the last time the market mitigate internal range liquidity, and when was the last time the market make a pullback down here? You have a closure on the 1 hour time frame, you have a bearish closure, you have the mitigation of this internal range liquidity, and then you took this external range liquidity. And if we go lower in time frame, if we go lower on time frame, we are going to see that this is a market maker buy model, right? This is what I was explaining to you before, right? Market maker accumulation, expansion, accumulation, expansion, accumulation, expansion, smart money reversal. And if you go here where the smart money reversal happened, in the low of Asian session, classic expansion daily profile. There are three types of daily profiles. Classic expansion, which the low is going to be in Asian session. There is going to be midday reversal, where the low is going to be printed on London session, and it's going to be New York protraction, where Asia and London are going to be accumulating, and New York is going to raid both sides, and it's going to continue, and it's going to create a continuation. So beautiful smart money reversal. And when I'm looking at the smart money reversal, I'm not looking at this price action here. I'm looking at the last range that have been violated. This is a low, this is a high, this is the expansion, and this is the reversal. When a bearish range, when a bearish range have been violated aggressively to the upside. So what I am expecting is that this range that have been violated is going to be mitigated again for a continuation. And then again, guys, there is no time without price. There is no price without time, right? There is no time without price. When you're bullish, you want to buy below opening prices. When you're bearish, you want to sell above opening prices. Example, midnight open says we are bearish overall, we are going to manipulate. The manipulation is done. Smart money reversal, manipulation, displacement. But look at where this manipulation came to be done. 8:30 offer price above and reverse. 9:30 open to the upside, offering price above midnight open, 8:30, and then you see the bearish price action failure to swing. When the market make a change in style delivery here to the downside after mitigating deep premium, you understand that this is a failure to swing high, and therefore you are going to be selling. Market opening day of Monday, we came to offer price above 8:30 to sell off. Midnight open. No, this is the weekly open, Sunday open. So we offer price above. We came to mitigate and pair this order, these sell orders, and then we just run to the downside to make the rebalance, right, of the previous weekly range. In Asian session, we see the first bearish range violated to the upside. We came back to pair these orders, and then we move. Midnight open, there is no reason for midnight open to run to the downside because the manipulation is already done. The mitigation and order pair is already done. So we are going to see always, we are in 3-minute time frame, offering price to bullish structure to run, right? This is the place that you want to go to low time frame. when you actually make the rebalance in high time frame, therefore you really want to see low time frame serving the creation of the high time frame structure. So if you go to 15-minute time frame, you can see a more clear buy to sell that have been traded to the upside, and you have here in 15-minute time frame your 15-minute time frame internal range liquidity to attack this market maker sell model. Therefore, you are on you were on the sell side of the curve. Smart money reversal in discount. Now you are in the buy side of the curve, right? So then, and this is something that you are going to be learning today, that is going to boost your career to a 110% win rate if you are disciplined to this. We already have been talking about the internal mechanical. No, we have been talking about the logic behind price. When we're thinking about logic behind price, there is only two questions. What the price haven't done that have to do, and when that is done, what the market need to do in order to continue or reverse. There's only two questions. So here, what the market haven't done, rebalance, the complete rebalance of the previous weekly range. What did we set on Friday? The reversal. What do we expect on Monday? Continuation for the rebalance. For the rebalance. Even though we might be wrong, I'm going to be buying here. The market can rebalance this bearish range and making a smart money reversal here and break down. But now I'm bearish, right? But at the meantime, the market is doing continuation price action. I will be buying, and I will get at break even as soon as I can, and let the market do the job, and let the market prove me wrong, and I will start demanding from the market bullish price action. So how the central banks create price? We cannot create price. Big institutions cannot create price. Brokers cannot create price. Only central banks can create price. So they do a hedging program. I am not going to get into the hedging program because this will be too long. But mainly the hedging program is that the central banks need to offer, if they want to buy the market overall, they need to create a bullish price action cycle, right? So in the manipulation of the price, which is the rebalance of the previous range, they are going to be buying the market. That's why in the market maker buy model and the sell model, you are always going to be targeting the upper, in this case, the upper side of the original accumulation, right? And in the sell market maker buy sell, and in the market maker sell model, you are going to be targeting the low of the original accumulation, because this is where the central banks place their buy orders. But you cannot buy something if there is nothing to buy. That's why they are giving you sells. They are often offering you sell side liquidity so you can buy the market later. The market cannot buy something that is not being offered to buy. So I'm going to offer you I'm going to sell you the product so you can buy it, right? Therefore, on the way down, they are buying in these bullish candles. Right? Central banks are placing buy orders here. At the meantime, they're offering sell side liquidity, right? So why they are doing this? and why this is so important, right? These orders, which are buy orders, let me actually put it like this. Buy orders, buy orders, buy orders, buy orders, right? So why is this important? Because at the meantime they're buying here, but they're offering sell side liquidity, those orders are going in minus, right? These orders are going in losses. They need to move the market to the upside in order for those orders to pass by the level that they bought, that they sell, what they're buying on, so these orders can go on profit. I know it's going to be a little bit difficult for someone, so I'm going to explain again. This sell side, the market, the central banks are offering sell side liquidity, but they're placing buy orders. At the meantime, they're offering something to buy, right? In the buy side of the curve. So at the meantime, they're offering sell side liquidity, but they're buying those orders going on minus. That's why we understand that it's mandatory when the smart money reversal happen that this high is gone, because these buy orders that are in minus until we don't pass, until the price of the product do not go over or above this price, these orders are in minus and they are not going to lose money. So smart money reversal, they need to push the price higher. So how they're doing this is actually the question. How do we know how they, or how can we follow the investment levels of the central banks? We have this buy order from the sell side that have been violated to the upside with a displacement. So we have here a fair value gap that have been created as internal range liquidity. This is your internal range liquidity to target in a scalping external range liquidity. But my question is, if you know that this is a market maker, the sell side of the market maker buy model, why would you take profit here? If you understand that there is more task to be done, right? So what you're going to be looking at is the buy orders from the sell side, right? The buy orders from the sell side being paired on the buy side of the curve, right? So what do we have here? We just violated another buy level from the sell side, closing above, and when you have another break to the upside, what do you see here? You see a mitigation of buy orders from the sell side, right? So these buy order levels from the sell side are going to be the levels that you're going to be waiting a retest after the market just break them down, right? When the market just violate this buy order from the sell side, you're going to be a participant of the buy after the market just violated, came back into it, and now you go. So if we see also this buy order from the sell side level, we see that really aggressive, we just run through the upside with two fair value gaps. You don't want to see the market mitigating the second fair value gap. As you can see here, you want to see the market leaving this as a breakaway gap, right? So your monitoring price is, or your key reference point will be the equilibrium of this buy order from the sell side. So you don't want to see any candle closing below the equilibrium or below this key reference point, right? So you are going to go to low time frame to see reversal here and here, right? So here we have also another buy to sell, but interestingly we have a gap. When you have an opening gap and buy to sell that have been violated to the upside, you want to take the gap, right? Remember, you want to be participant of this buy side of the curve using the investment levels of the sell side of the curve, which have been created by central banks. You don't want to trade with your broker. You don't want to trade with your signal provider that you're paying for. You want to become a self signal provider. And the only consistent and more reliable signal provider that you are going to have is yourself when you understand how the market is booked, how the market is created. And this is what you're learning right here, right? So then here we just close above, we make a retracement to the downside, to this down close range. I don't want to get into order flow, but then we move away from this, closing above. We came to mitigate this auto block, down close range that have been traded to the upside, right? So then here we have also buy orders from the sell side, right? So we have this displacement, right? And the interesting thing, you will say like, well, the range is too wide. Yes, it is. But where is the point that the market have been using this auto block to push the price lower? This level. And as you can see, this level is paired with what? With an inefficiency. Here was an auto block. Here it builds inefficiency, right? And when you're looking at this, time and price, right? The mitigation to the internal range liquidity have been done already. 7:30, well, 8 at 8, but 7:30 already make the open, low, high, close. So the mitigation of the internal range liquidity is done. 8:30, make a run to the downside, and then make a change and start delivering low time frame to the upside here, declaring this mitigation as a no return place, and then your market maker buy model have been completed. At this point, you was like, okay, I trade from internal range liquidity to external in all these points. Hopefully, you have been adding to your wins in every single point, and then you calculate yourself how much I have made this week, this day for the week. If you are okay for the gains that you want to have in a week, you don't need any more trading that week. But if you want to keep trading, no problem. What are we doing with previous ranges? Right? We make a rebalance. We have buy orders from the sell side, holding price. How do we know this? How do we know that we are not going to make a rebalance to the equilibrium? We are just going to book this buy order from the sell side, time and price. We have Asian session, then midnight open. And I'm going to, now that we are talking about continuation, I want to make clear this situation and this misunderstanding of the Asian session myth. You have been told for every single mentor, even ICT, right? Because ICT do not make too much emphasis on the session that create the midnight open, but I will. He just mentioned a few times, but it's the most important session during the day. It is not Asian session. It is Frankfurt session. Because Frankfurt session opens at midnight open in New York time, 6 a.m. Eastern time frame, time zone. So be aware of what Frankfurt session do, that this Frankfurt session is going to determine if your day is going to be bullish or is going to be bearish. And I don't want you to believe me. Go to the charts and look every single time market the day have been ending bullish, where price have been offered when midnight open have just show up or been printed. right? And I'm going to show you here, but I want you to do the hard work so you don't say, okay, this Cuban guy says something to me and I'm going to just do it because he say it. My students not supposed to believe me. My student supposed to go to the charts and see if what I'm teaching them is the reality of how price is built. Because I don't want you to believe everything that every person say to you. That's not the job of a student. The job of a trading student is to get the information that the mentor is giving and then go to the chart to see if what the mentor is giving work every time. So keep that in mind. Open midnight open is Frankfurt session when the European market open after Asian session is closed. The first European market that opened is Germany with Frankfurt Exchange House at midnight open 12 o'clock um, New York time frame. So what do we see here? We see the concept being played out. Midnight open, straight away making a distribution to the downside, offering price below midnight open. Here we have the first bearish range being violated to the upside. This is a low time frame market maker buy model, right? And then what do we see? Buy orders from the sell side being respected. Look at the price action on the encroachment, consequent encroachment of this range. We just came back to rebalance this range, book the buy orders from the sell side, investment of the central banks, and we move away from them. Which was this was the last bullish, very bullish buy to sell that have been used to push the price lower. When we extend this into the future, it overlaps with a fair value gap and an inverted fair value gap. So we offer price above midnight open. We came back to discount of this bullish range that now have been created. Look at the equilibrium, how the wicks are doing the damage, but the bodies are telling you the story. We just left the accumulation. We have a displacement that actually is a good sign of bullish because this is a breakaway gap. The market never came to mitigate this and we just extend. So what do we have here? When the market left and you're late, oh fuck, I'm late. I don't know what to do now. Where is your last buy to sell that push price lower? This one here. What is this pair with? A fair value gap, a displacement. So what you're waiting now for? Time and price. Don't be afraid. Oh, we are going to offer price again below midnight open. That have been done already. That's why you want to hear. The market talks to you through price action. You need to listen to the market. And again, fucking forget about what you think. Because what you think 99% of the time is going to be wrong because you're thinking with feelings. You are analyzing the market with logic. This is what you need to learn and train yourself to do when it comes to mindset, right? Forget about what you feel or think. Just trust your logic. And the logic said that the market already offered price below midnight open, offer price below again here, and then move away with displacement. Now it's time to order pairing to take place. Buy orders from the sell side that create a nice pair with the displacement. Sorry, with the displacement. What time did? Again, there are 4 times during the day that you are going to be able to be a good participant of the market because at these specific times is when the market create the high quality setup for you to be involved. So you have midnight open, you have 8:30, you have 9:30 and 10 a.m. These 4 times should be your time restriction where you are going to be involved in the market. And then after you learn to be disciplined to this time restriction, is just set and forget, right? I'm pretty sure that every single trader that is listening to this want to be a set and forget trader. Okay, great. Now you have the tool, time restriction. Time restriction. And what I'm the good thing about my style is that I don't care about Asian session. I don't care about London low, London high, London liquidity, Asian liquidity. I don't give a fuck about none of that. I'm just following time and price. I'm taking away from my brain to overthink what London have done, what Asian section have done. No, I want to trade the market based on what the price is building over opening price levels. And that will take a lot of noise and a lot of over analyzing the market that is killing your making decision ability to follow actually what price is building, right? So time made the mitigation, which is manipulation. 8:30 open, New York open came all the way down to my internal range liquidity. 9:30 came to offer price below 8:30 and below 9:30 and just move away. What is the concept? When you're bullish, you're always going to be a buyer below opening prices. When you're bearish, you're going to sell above opening prices. I'm giving you right now the foundation of your trading career. Do not waste this knowledge. And again, don't believe me. Go to the market and look how many times when the market is bullish, the market offer price below opening pricing to create the expansion. And when the market is bearish, how many times the price offer price above opening prices to create the bearish expansion. Don't believe anything that I'm telling you here. Go through the market, right? Therefore, expansion. We are already, again, we already mitigate this area. We booked this buy order from the sell side, paired with a fair value gap. We are in an expansion phase of the market. I am not expecting Asia to be whatever. I'm waiting for this time to appear in front of my eyes. I'm disciplined to this. Midnight open. What do we have prior midnight open? We have a bullish range. That is the current one, right? Sorry. We have a bullish range. This is the current range that I have. And I have an overall range. This is the last time the market raised liquidity opening price of the day. Again, opening price of the day. We offer price below opening price and we reverse. We have a low and now we have a high. If the market already made the manipulation below opening day level and is creating an expansion, I'm not expecting this because there is no place that need to be rebalanced. These fair value gap have been rebalanced. These fair value gap have been rebalanced. Now we have a new one with the order block here, sell to buy. So midnight open, make the mitigation of this order block, filling up this fair value gap and reverse. Then came back again to make the run because again, we don't see any run to the downside, offer liquidity after we run. We came back to offer price below midnight open and we expand, right? And as you can see, buy order, actually, buy orders from the sell side, 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 right? Right? There is more to this. To be more accurate, there is way more to this. But this is the foundation of my trading because what happened to me was that I was eating, I have in my brain more than 17,000 hours of YouTube. And the only thing that creates in my brain when it comes to trading is confusion. So after having all this noise in my brain, I dedicate time to just clean the noise, right? So I'm giving you hours and hours and hours and hours of cleaning the dust that you also might have, right? And again, the only job that you have is to monitor price in these levels, is to monitor price in these levels. You are not a trader, you are a price auditor, you are an inspector of price. You're nothing more than that. And that knowledge of what you are will give you the patience to allow the market to build your trade every single time based on the most important thing in price, the logic behind price. I hope that this video can help you a lot, because if you pay attention to this and go to the charts and try to see what I have explaining to you since the beginning of this video, you will understand that there is a lot of things within your trading knowledge that you really don't need to use in order to be a successful trader. And what you really need is to create a simple strategy based on how price is booked by central banks. Have a good day. This is Daylight with the Next Trade Academy and Londres 6 server. Have a good day.